Senator Smith of Minnesota is recognized.
Thank you, Chair Brown and Ranking Member. It's interesting, just apropos of Senator Round's comments and questions about crypto. I was not here earlier because I was at the Banking Committee where we were having a conversation about issues. I was at the Ag Committee, pardon me. I know, where am I? See, I'm a little confused. I've been running around. Anyway, I just note that there are a handful of us, you, Senator Brown, and Senator Warnock and I, that serve on both agriculture and banking housing, and as the issues of how we should create a regulatory framework for crypto commodities, digital commodities, as well as digital securities. I think we have an important job to do here. Chair Gensler, on the, I want to go to the question of materiality. On securities laws, they are grounded in the concept of materiality. And since we've emerged from the Great Depression, we've acknowledged that investing in the stock market comes with its risks. But investors ought to have information about that they need to be able to prudently evaluate those risks and make good informed decisions. And this is especially important today as more than half of families have investments in the stock market, including their retirement nest eggs. So could you talk to the committee, just broadly speaking, about how climate disclosures for public companies are material information for investors?
It's material because, as the Supreme Court says, substantial likelihood a reasonable investor is considering it significant in their mix of information. And right now, it's really remarkable what's happened in the last 10 to 20 years. So many investors are considering it. And why are they considering it? Because there's a future chance of transition risk. They might have to change their operations. Their competitors might change their operations. Laws might change. These companies that are listed here in the U.S. operate around the globe. On average, if you look at the top 500 or 1,000 companies, half their operations are overseas. And so it can affect all that. But it's material because, as the Supreme Court says, because investors get to decide what risk they take, and investors are saying it. In our comment file, if you look at the top 300 or 400 of the investors, the big asset managers, it adds up to $50 trillion of assets under management that have come in, mostly supportive of this. I mean, I know that there's a lot of good discussion about what do we do about the farmers and not getting caught up in Scope 3, and which is a good conversation we've had. But mostly the investor community has come in these 14,000 comments supportive.
And it's good for those investors to be able to understand what those risks are in a more comprehensive and clear way.
Absolutely, and investors get to decide. If somebody says, I think those risks are significant, but a company's managing it well, I should invest in it. They might say that, I think that the market is overpricing a stock, and they might say, I want to sell that stock because I don't think this, I think that assets that are emitting a lot of emissions are still going to be really profitable. That's up to investors.
On another topic I want to touch base on, I was pleased to see the SEC take action to increase transparency and accountability in the private fund market. Private funds, including private equity and hedge funds, have an outsized presence in our economy, $18 trillion in assets. And a substantial portion of that, again, includes retirement savings held in pension plans for teachers and municipal employees and others. And in recent years, individual ownership of private funds has also been on the rise. So, Chair Gensler, can you talk about the recently proposed amendments to Form PF and the private fund advisor rules, and how they would, interact with eliminating conflicts of interest issues, protect investors, and protect the integrity of the private fund market?
So we've done two sets of rules with regard to private funds. One, to promote greater efficiency. What that means is lowering the cost of this. It's actually grown since that number, about $21 trillion. And they probably take revenues of about $300 billion plus. And that means those teachers, firefighters, those pensioners are getting a little lower potentially return. So it helps them. So we're trying to promote greater efficiency, transparency of fees, performance, and side letters. You mentioned a form called Form PF, Form Private Fund. That is something that was put in place after the 2008 crisis. Congress thought the SEC and our sibling agency, the CFTC, should get more information about these funds with regard to mitigating and monitoring for systemic risk, the big crisis of '08. And we're updating those forms.
Thank you. Thank you very much, Mr. Chair.